Hi guys, good afternoon. You've tuned into Money Control and I'm Karunya Rao with Manisha Gupta. And today, we've all this while been talking about how aluminium has been the most outperforming, biggest gainer of the recent commodities bull run. But now it's at a 3-week low. Why is that? Is this a momentary correction, or do you think it's a trend now that we should watch out for?
I think it's a trend that you should be watching out for now, because we've seen prices correct on a week-on-week basis, and we are negative now on a month-on-month basis as well. It was in the first week of March when Russia invaded Ukraine, and Russia basically produces 6% of global aluminum, and we did see prices run up because of the supply concerns, because of the kind of sanctions we saw in Russia, and we did see aluminum hit a multi-year highs at around $4,100 a ton. It's currently trading at $3,300 a ton. So it has been a very sharp $700, $800 of a correction that we've seen coming in the last couple of weeks itself. And the markets are looking at the fact that there is supply reaction to these higher prices. The demand is not so strong because China lockdowns is one part of it, and Japan is also looking at physical premiums less than what they were in the previous quarter. So at 2.8% less than in the previous quarter tells you that on-ground demand for aluminum is not so strong. And then Rusal is also producing from Virginia now. So you are looking at supplies coming back and demand not so strong.
But what happened to the demand suddenly? How big a consumer is China? Because you said the lockdowns in China is a big factor for demand going down. I mean, once the lockdown will eventually lift, we all know, and China will resume the economic activity. So will it normalize in the next couple of weeks or maybe a month or two?
It should, but another thing that's coming in from China is that China has turned into a net exporter as well. So China production in the previous month has been the highest in last 2 years also. So we are looking at a very strong supply side reaction coming into the higher prices. And yes, China matters a lot. China is 50 to 60% of aluminum production and consumption in the market. But the fact being that much of the price rise, there was no reason to be all-time highs. Much of the price rise really was because of Russia and Ukraine, and that premium is off the markets right now. And we're just talking about demand supply right now, Karunya. If you look at the macros, which says the dollar index hit 100 today. So it's a 2-year highs, which is putting pressure across metals, across commodities also. And the other fact is that if the US Fed is looking to cut its balance sheet, as it says, by that huge number, that would take a lot of stimulus and speculative money out of the markets as well.
Yeah.
So we are looking at fairer prices coming in. And as you said earlier, yes, this does look like a trend reversal. I wouldn't mind another 5, 8, even 10% of a decline in aluminum from here on.
Are others also reacting in tandem with that, whether it's a copper, a nickel, which were also, quite charged up?
It sure is that the case, because we've seen copper, nickel, aluminum all hit an all-time highs. Zinc hit a 16-year highs, and all of these metals are now 5 to 8% off those kind of highs. And yes, you could be looking at a similar amount or a quantum of a decline from these current levels as well. And macros is going to be the major reason for that. China will come back. Well, yes, we are in a peak demand season right now, but it doesn't seem like that, with many countries right now facing a 5th or a 6th or a 7th COVID wave. So manufacturing, travel, infrastructure is slightly on the lower side. And even if you put that EV demand debate in front there, the supply reaction that we have seen in sense of prices will ensure that the EV demand is met because of that.
How are domestic stocks reacting, whether it's a Hindalco, a Nalco, and I think even Vedanta has some exposure to aluminum. So how are they reacting to this?
So there is a decline into these as well. Most of these stocks are off the highs that we saw. We started with metals. I mean, the outperformance first of all came in metals, and all of these stocks that you just mentioned actually ran up.
Yeah.
But there has been profit taking here, and if we are expecting another 8 to 10% of a decline in these metal prices, then you can very well expect
in line with that.
It would happen like that.
Okay, and what's happening with oil? Because I think earlier in the day it was down, it's about 2% What's happening there?
That's exactly how it's trading right now as well. We've seen 2 straight weeks of decline in crude oil prices, and the third week is started on a weaker note as well. And all the macro factors seem to be working here as well. We did see prices go up to 140. They are trading just about at 101, 102 right now. And the markets, we do believe that this is the consolidation area right now. Anywhere between 92 to 102 is where you will see a band forming for crude prices now. So, well, yes, most of the commodities perhaps have done with their peak for the first half of this year, and from here it's going to be consolidation and some more correction from these levels. So going long at these levels, I don't think is a very great idea. I think you could be selling at every rally, every uptick that you see for the new term.
That's an important insight. I hope our viewers are taking note of that. Guys, with that, we'll wrap the commodities chat. Thank you so much for tuning in.